Everybody, Doug Davis here with Guaranteed Rate Mortgage. How are you? Hey, I'm doing my annual mortgage review and just wanted to reach out to you. For those that we've done mortgages, in the past, which is a lot of you, I constantly monitor your mortgages, keep an eye on them for any opportunities that you might have. Of course, sometimes things do slip through the cracks. So I just wanted to kind of present this, give you some ideas of how you can one, reduce your monthly payment, maybe some things you haven't thought about, or B, how you can leverage all that money, all that equity that's locked up in your house, especially with the tremendous growth that we've experienced over these past several years. So I wanted to kind of give you some ideas. With equity in your house, the only way to get to it, right, is if you sell your house. Well, the problem with that is you got to sell your house, right? So unless you're looking to move, what's a way that you can access that equity? Well, it is to take out a mortgage on it, right? Now, for you as well, if you think about it, when you start a mortgage payment, most of you get a 30-year fixed. You have the exact same payment for 30 years, right? So it doesn't matter until you could go to the last payment, right? Let's say you paid $3,000 a month in mortgage. Let's say you pay it all the way down, your house mortgage all the way down to $3,000. Well, guess what? Your last payment is $3,000, right? So it's $3,000 for 30 years. So I'm going to give you some ideas on how to reduce that payment, right? And possibly even leverage that to something that could help you achieve maybe your investment goals faster, maybe your retirement window faster, along those sorts of things. So let's start with saving money monthly. Well, probably the most obvious, and most of you know, but I think it is worth repeating. If you consolidate high interest credit card debt or personal loans, any kind of debt with a high interest rate, typically on average for my clients, I save them anywhere from $200 to $300 a month by doing that. And a lot of times it's a lot higher. It can be $500. I think one of my clients saved actually $1,200 a month. So that's you get a lot of bang for your buck on that. So just keep that in mind. Outside of the cash out, refinance, paying off debt, there's of course just changing your rate and term. Rates are a little bit higher than they were in their historic lows, right? But still not that far off historic lows. So let's say that you had some issues and had to get a less than desirable mortgage. A lot of you could, benefit from refinancing. Some of you might want to save a little bit more money, right, by doing a rate and term refinance and get an adjustable rate mortgage, right? The other thing, a lot of you have mortgage insurance. So if you had a mortgage and you refinanced it and you had greater than 80% loan to value, you had to carry mortgage insurance. Well, as we mentioned, the tremendous equity growth over these past few years, a lot of you could refinance at 80% loan to value or less and drop that mortgage insurance, right? Usually that's about $200, $300, $400 a month. So for those of you that apply, keep that in mind. The other one is a second mortgage. A lot of people will put on like an 80% first mortgage and a 10% second mortgage, right? To avoid mortgage insurance. Now the only problem with that, and for the longest time, just about 10 years I think it was, 9 or 10 years, the prime rate, the Fed's rate, was shoved all the way as low as it pretty much could go at about 3.25%. As many of you notice who have second mortgage or credit card debt, because they're all a lot of them are based off that prime rate, that rate rose 0.75% last year, and it's already raised 0.5% this year. Most experts are predicting another raise, and then most experts are also predicting, at least for the foreseeable future, continuing of raising of the prime rate 2 or 3 times a year, so 0.5% to 0.75%. What that is during the Great Recession, they drove it down to that very low point to stimulate the economy. Well, as many of you know, the economy is doing really good. So they are now raising it because it's a fear of inflation. Basically, the point is from January 2009 to December 2015, the prime rate was at 3.25%. Now it's at 5%. You add most of the home equity lines of credit have a fixed margin. So most anybody with a second mortgage has a rate anywhere from, let's say, 6% to 7.5%, 8% or higher. That's another reason why they're not always the best option. You need to be careful using them for like a remodel, right? Where you pull out a bunch of cash to do a substantial remodel with your house. So just keep that in mind as well. So the whole idea with the first and second is to consolidate it into one loan, one fixed rate mortgage, and get rid of that variable aspect, especially if that second mortgage is fairly large. Because when you do the weighted average, right, you might have a decent low first rate mortgage, right, but when you add in that second rate mortgage, a lot of times the weighted average of those rates is pretty significant. So just keep that in mind. Now let's talk about something that you can do with the money that's locked up in your house as far as reaching your dreams faster, some of your life goals, maybe retirement earlier, things like that. So the first one, probably maybe the most obvious one, is pulling cash out of your home, your primary residence, and pushing it forward and leveraging that cash out to purchase an investment property. So if you, say you have a $750,000 house, let's say you have a $300,000 mortgage, and you pull out an extra $200,000 cash out. Now you have a $500,000 mortgage, and you push that $200,000 as a down payment and closing costs for a $650,000 investment property. Well, all of a sudden you have a total combined $1.4 million under investment in California. That's what they call leverage. So that's probably the first example of how you can leverage the money that's tied up in your home. Another way that you could push your equity forward, and this one does entail actually selling your house, but actually consider upgrading your house to a larger home. Maybe you've always wanted a pool, those kinds of things. A big deterrent has been our big inventory problem that we've had, for these past several years. Well, that has pretty substantially changed. Inventory is up considerably. There's a lot more to choose from. So you'd be surprised what's out there. You might want to take a look. Of course, I do purchase mortgages as well as refinance mortgage, so I can help you with that. I also know a lot of good realtors in the area, and I can make some recommendations at Los Angeles and Orange County. But that's a way to upgrade your house, therefore, putting a more valuable home under investment again in California. So something to consider. And then another idea that you could do is just remodel your existing house. If you don't want to move, want to do some upgrades to your house, again, maybe you want to add a pool, or maybe you want to add a bedroom, or maybe you want to add a second story. Just do a cash out refi, pull out that money. Again, I've kind of gone over the pitfalls of the second mortgage. It's just the variable aspect. So you could just do a fixed rate cash out mortgage, pull that out, improve your house. When you improve your house, usually it's not dollar for dollar. So you put in $1 and you could get $1.50 or $2 back as a rate of return. And that, obviously varies. So, and not only that, but you live in a lot nicer house that you can enjoy, and you've added value. So now you have technically more money under investment in California real estate. So another thing to think about. Another investment idea is, some of you have existing businesses and you need to scale or expand that business, right? To increase, over time, your revenue growth. You might need to hire some new employees, or you might need to invest in infrastructure. Well, the mortgage rates on a cash out refi are oftentimes much lower than a business loan, right? Or what you would need, or sometimes if you get in a pinch, a hard money loan or something like that. For those people that have business ideas, right, to begin or start a new business, entrepreneurs out there, pulling cash out again is a lot cheaper alternative to a lot of other types of business loans, right? To start a business, to have startup capital, to get a business going and to be able to sustain it and get it off the ground. And then I just want to mention a third category as well. And it is actually just sparked by an article that I saw that more and more Americans feel that it's okay to pull cash out of their house just to pay the bills. Let's face it, right? We live in California. I mean, one of the most expensive places on the earth to live. So it's not all just for pulling cash out or reducing your payment to invest. Some of it is just for some people it's just to live, right? To be able to breathe and not feel strangled. Some other things that you pull cash out for is for instance school loans for your kids. If you have maybe multiple kids in college, right? Or if you have a medical emergency, right? Where medical bills stack up, or maybe you have an aging parent, right, where they need hospice care or medical care, or you need to build an extra unit onto your house. So there's a lot of different reasons, that you can pull cash out. Typically for those things, high interest rate credit card debt and personal loans, you don't need a whole lot of money to get a whole lot of, effect, right? For other things like what we're talking about, you probably, at a minimum want to pull out $75,000 or $100,000 or more to make it worth your while, right? Because there are closing costs involved as well. So, just keep that in mind, but maybe you bunch a few of those categories together and then pull it out. Now, to be responsible, obviously if you're pulling out money to breathe, right, that payment is going to attach with that money that you pull out. So, you want to be responsible with it, and you want to, maybe you see a promotion coming or an increase in business if you own a business, that kind of thing. So you want to be wise. But to keep money locked up in your house and to suffer, and I see a lot of people doing it, sometimes that's not the wisest thing to do. You have to take, some calculated risks there. So hopefully I've given you some good ideas, some things to think about maybe that you haven't thought of before, of how to leverage your passive asset, which is your home, in a way that can push it forward to, again, meet your retirement goals earlier, meet your life goals. Maybe it's starting a new business or getting a business off the ground that's already started, or maybe it's reaching your investment goals sooner, and financial freedom or financial wealth. And hopefully these ideas came in handy for you. One of the things I wanted to say about all the investment strategies, past performance is no guarantee of future results. Results do vary. Always, consult your trusted advisor, CPA, financial planner before you do any of them. And there's always a risk, right, that you could, pull cash out of your house and lose it all, right? Whatever you invest in fails, or doesn't work, or doesn't get the rate of return. So I think it's important to say with, the good, also the bad, but again, no pain, no gain. So there's always no risk, no gains. A lot of you don't know a whole lot about me, but I'm 18 years in the mortgage industry. My company, we're a direct lender. We're the 6th largest mortgage bank in the U.S. We're known for having some of the lowest, if not the lowest rates in the industry among peers. So I think you'll be impressed with that. One of the things I always recommend, be sure to check me out on Yelp, Angie's List, Zillow, Google Places. If you just do a Google search, Doug Davis and mortgage, all my online testimonial places will pop up. You'll see I have all 5-star reviews, and I think over 100 reviews now. So you can tell a lot about somebody just by the reviews that they're given. So make sure you check those out. And lastly, in closing, I always appreciate your referrals for friends and family. Your referrals are very valuable to me. I know that I'll take really, really good care of them. If there's anybody that that needs help with a refinance or purchase. Be sure to subscribe to my channel. Click the little bell to get notifications of new videos coming out. I'm going to be tracking the rapidly shifting market. We are under a tectonic shift right now in the market. There's going to be a lot of opportunities that arise from it. I'm about to send out my state of the market for Los Angeles and Orange County here pretty soon. So keep an eye out for that. If you click that bell, it'll notify you when it comes out. And would love to help you out. So let me know again if I can be of any assistance to you or any of your friends or family. And my number again, 562-673-0376. Make it a great one. Okay, take care.